Welcome. In this video, we're going to explain how an expansion develops within a downtrend, and how it clears the liquidity that is preventing price from continuing in its primary direction. Our objective is to ride the expansion as the result of its minimum corrective move. We're looking at the S&P 500 on the 5-minute time frame. Price has entered a 4-hour buy block, highlighted in orange, which forms a confluence with buy blocks from lower time frames. Now, pay close attention to the volume. This spike represents buying pressure reaching 200% above the moving average. The combination of price action, volume, and the structure of the expansion leads me to anticipate a corrective move. Our target will be the liquidity resting above the 1-minute structure. Now take a close look at the price structure on the 1-minute time frame. Price is forming an expansion with two distinct frequencies. Notice the corrective phases within the structure. The first correction establishes the initial expansion frequency. I'll use that move as my reference, defining it as the 1.0 measurement. Next, I measure the second frequency against the first, and we can see that it extends to approximately 1.786 times the length of the initial frequency. According to Fibonacci ratio logic, this makes the 1.5 extension of the second frequency length as the move target. I then project this measurement onto the third frequency that has just begun, and now the next step is to determine the correct angle of the trend. To find the trend angle, I simply derive it from the two lower pivot points of the price. This gives me the trend's linear angle, along with the position of the dynamic liquidity level that moves together with price. The zero level of the trend is anchored at these lower pivot points, serving as the foundation for the entire measurement. What we're expecting to see is a healthy oscillation around the 1.5 level, which acts as a natural attraction zone for price. The boundaries of this zone are defined by the 1.382 and 1.618 Fibonacci levels. Ideally, price will oscillate within this range, gradually building liquidity above the market before the next significant move. Now, as you can see in the video, I'm having difficulty pinpointing the exact location where price will interact with the 1.5 level. The missing element is time. In trend frequencies, time ultimately determines where price will be. To estimate the timing, I measure the most recent price movements as a linear rhythm. The 0.75 and 1.0 levels represent potential bifurcation points, where price may change behavior or direction before continuing its move. Now, as you can see, price is forming a fractal correction within the move. This allows me to identify an additional entry opportunity. The entry appears when price returns into the green block that it previously broke above. Pay attention to the precision of price interaction with these blocks. This is a fundamental price action tool in technical analysis. Understanding where these blocks are located is absolutely essential. I apply an extension measurement to the initial move of the structure, from wave 1 to wave 2 and then to wave 3. This allows me to understand the preconditions and internal mechanics of the move. The interaction between the blocks and the confluence of trend ratios align beautifully. This provides a way to understand price movement not only through price itself, but also through the dimension of time, which can often determine where price is likely to be. The 1.5 level of the extension played a role in the previous wick. If you look closely, the wick reacted with remarkable precision. This suggests a liquidity preparation phase before the next expansion. As a result, the 2.5 extension level becomes the target zone for the next liquidity price objective. The magnet's location was hit with excellent precision. This means that my levels, in terms of time and price, are in calibration, and that my setup is accurate enough for me to rely on. The price oscillation inside the trend's attractor zone and around the 1.5 level represents a liquidity building phase before a potential short squeeze. Once this liquidity is taken, price should generate a countermove at least equal in length to the move that caused the recent decline. Now I want you to pay attention to the volume, because volume tells the story of the expansion. It shows when the upward move encounters opposing pressure, when it demonstrates strength, and how that strength is reflected through the candles. The different possible candle configurations combined with volume behavior can reveal the story behind the move. They help us understand the structure of the expansion and identify when an energy bifurcation may occur. The 1-minute liquidity has been taken, and the trade has reached its conclusion. Although I could extend the trade toward liquidity on a higher time frame, because on the 5-minute time frame there are still no clear signs of exhaustion in the move. The momentum remains intact, and the expansion has not yet shown significant signs of losing strength.